When should I start investing? Maybe next month? So I started investing last week. I should be rich by now. I love tech companies. I'm only buying those. If this stock with ticker SNOW, I have no idea what they're doing, but it looks really promising. Let me invest into this. Let it snow, let it snow, let it snow. Hello everyone, this is Alex here. Welcome to my channel. Welcome to the investment journey. I hope you're doing well. I hope you're staying safe. Like this video, subscribe. So today we're going to be talking about all the common mistakes investors make. It doesn't matter if you're just starting out today or you've been investing for some time. I'm pretty sure you found yourself in some of the situations we're going to be discussing today. I certainly was there, and I wanted to share what I think are the most common mistakes people make today when it comes to investing. And let's jump into this. So the very first one, and one of the most important one, is people are not smashing the like button. Go fix it. Just do it. Just smash it right now. It's gonna bring me more power to make videos like this. So just do it. Thank you very much. Jokes aside, the very first one is emergency fund. So emergency fund is a sum of money that you have on your high interest savings account that's gonna help you out in case of any emergencies, which is going to cover 3 or even better 6 months of expenses for you and your family. So why do you need that? You're investing money, right? And then you don't have an emergency fund. And some emergency comes up, what are you gonna do? You're either gonna get your credit card, use it for this, which is worst case. You're gonna have a new loan opened to deal with this emergency, or you're gonna sell your investments to deal with your emergency again. You don't know when it's gonna happen. It might happen when the market is not performing very well, and you don't wanna sell anything from your investments unless this is the time when you actually wanna sell your in retirement age, or you decided to sell everything for some other reason, right? Fun fact that actually in Canada, for example, half of the Canadians didn't have any emergencies saved up. And what it means that people are risking to get in debt if any emergency comes up, or they're gonna be required to sell their investments if any emergency comes up. Looking at US statistics, only 23% of Americans actually have emergency funds for 3 to 6 months saved up. It's a very low number, and it's even worse than in Canada. So don't be there, just make sure you have your emergency fund saved up. Number 2, you keep waiting for perfect time to start. Don't wait, just start. I think this is one of the most common misconceptions out there, and I was there too. I was afraid to start. I didn't know when to start. I was keep postponing, keep getting this excuses to myself. All right, today is not the right time. I'm busy, I'm gonna do it tomorrow or next month maybe. Or things like, okay, I'm gonna get a promotion next month or next year or in a couple of years. That's gonna be the best time to start investing. Or I'm young, I'm still young, why should I do it? Let me party hard for now and then I'll start investing later on. Or I don't have enough saved, I have only $1,000. Why should I keep bothering with investing? I don't have to do it right now. I'm gonna keep saving and invest later on. So all of these are not valid excuses. The earlier you're gonna start, the better is gonna be the results and the faster you're gonna achieve your goal. You can start with as little as $100 or even $10. You can check out my previous video here where I'm going step by step on how to start investing, how to invest your first $1,000 and what you need to do that. So don't wait, just go there and see for yourself and start today. Don't waste your time. Third one, misconception, the investment is gonna make you rich overnight. Not gonna happen. We're here for a long run. So on the stock market, you can do 4 different things: day trading, options trading, swing trading, and investing. Day trading, which is basically you buy and sell stocks or any other securities throughout the day. So you're trying to predict the different price for different securities, and you're benefiting or earning money from these price differences throughout the day. The second one is options trading. So what does it mean? So option is a contract, trading is trading. So trading contract. So what it means is that you're thinking that the price of a certain security is gonna go up or down in a matter of next 5, 10 minutes or half an hour. And you're signing this contract saying that I think the price is gonna go up in the next 5, 10 minutes. So I'm gonna buy it right now for the price of $10 in order for it to be sold at the price of $15 in the next 5 to 10 minutes. If the price went up to the level where you thought it's gonna be, great, you just secured a profit. If the price went down, actually whatever you thought it was gonna be, not that good, you secured a loss. So it's very risky, but it's also high rewarding. The third one is swing trading. It's a style of trading that attempts to capture short and medium term gains in a stock. It's a risky one too, but also the potential rewards are pretty high. And the fourth one is investing. As I see it, investing is when you are there for long term. So you're investing in the securities that you're not gonna sell ever, or you're gonna planning to sell those in 10, 20 years. So the risk is basically pretty low, but also the returns are not that high as in other types of trading. You're basically relying on the market to be growing on the long term, which is going to happen, and it's been happening since the inception of the stock market. I put dividends investing as a subset of investing, as the whole idea of dividends investing is that you are there for a long run and you are keeping investing your dividends over and over again. And for example, eventually you want to live off your dividends, that will require your investments being in place for as long as you want to get those dividends back. And let me know in the comments if you want me to make a video describing all different types of trading and what they mean in detail. But in short, the higher risk, the higher the reward. An investment is in place where the risk is super low and the rewards are somewhere in the medium range, 7 to 10% per year, which is pretty good. Also account for dividends on top of that, and it's gonna be amazing. And I'm considering long-term investing is a super low risk, just because stock market never lost its value in the long run. So the idea of investing is not that you're gonna get rich overnight. It doesn't work that way. Investing for long with enough contributions is gonna make you a fortune. And it's basically a way to get infinite money with a low risk as possible. So consider this, you earn $60,000 a year, out of it you spend $50,000 on whatever you need to spend it on, you invest the rest, which is $10,000, you repeat this for 40 years, what is the end result? You're now worth $4.5 million. Pretty good. Number 4, this one is a big one, never lose money. You only lose when you sell. So stocks and ETFs you're buying in the stock market are just pieces of paper. In order to buy something real for it, like food or a car, you need to convert those stocks into real money in order to buy something. And when stock market is experiencing a downturn, your position is gonna go down too with it. Of course, thank you, genius. Which is okay, as long as you don't sell. The minute you sell, that's when you secure a loss. Just wait it out, stay strong, and let the market do all the job for you. So a really good example is last year, 2020. Let's go back there. So February 2020, the market is performing good, all-time highs, we're good there, right? And then in March, stock market plummets 20, 30, 40, 50%, and then now we have two use cases. You're selling all your positions or most of your positions just because you're worried what's gonna happen. You don't know what to do, so you're selling all of this. And that was the moment when you secured a 30 to 50% loss of your entire portfolio. And for example, 30% of loss, it's 5 years of investing 5 to 10% appreciation every single year. You just lost 5 years of investments from your life. That's insane. Why you want to do it? You don't want to do it, right? So going back to use case number 2, where you are sitting there, you've seen all this market crashing, and you are just waiting. You're waiting for things to get better, right? And now we fast forward to October, November. The stock market is now back where it was before March. And you basically recovered. And a very good point brings us back to mistake number 1, emergency fund, not having an emergency fund. So again, you're in this month of March where the market just crashed and you have your emergency fund that helped you out to pay for all your expenses, and you lasted with your emergency funds until October, November when things start to get better. Mistake number 5, diversification. This is a very important point. There are different sectors on the stock market that you can be exposed to, like transportation, finance, real estate, energy, utilities, technology, and you need to be exposed to most of these sectors in your portfolio. Why? Because that if one of the sectors is experiencing a downturn, you still want to be sure that your portfolio is performing well and you're not losing all your money at once because the real estate just crashed. And this is especially important if you're investing into individual stocks, just because it's super hard for you to keep track of all the different sectors and keep shuffling your portfolio to make sure you're very well diversified. And if you don't know what are the individual stocks that are good in real estate, you can purchase ETFs that are specifically oriented into real estate markets. That's going to be way easier for you to manage, and you're going to be exposed to different types of real estate at the same time as well, like commercial and industrial and residential. Or you can be even more conservative and you can buy an ETF index that covers all the top 500 companies in the US, S&P 500. I also create my own portfolio tracker that tracks dividends, the stocks I'm holding and the ETFs I'm holding, and it also has market diversification graph, which tells me if I need to invest into other sectors more than the others, so that my portfolio is very well diversified. I'm going to be sharing this tracker with all of you in the future. I just need to finish it up a little bit, and I'm going to be exposing to you all of this in the next month or so. So the last learnings for today is only buy stocks you understand, or go with ETFs. I know there are a lot of stocks and companies out there in the stock market, and the tickers are actually very appealing. Things like Worm and Alex and Snow and Work, or maybe your neighbor told you to buy that and this, or maybe even I did and told you to buy this and that. Don't do it just because someone told you to do so. You gotta do your research. You gotta make sure you understand what this stock, what this company is doing. First, and the most important thing to know here is that you gotta look at their balance sheets and financials and see what the company is doing, how it's performing. Or you can do a shortcut and buy ETFs. ETFs will have requirements for all their holdings. It means that they'll shuffle things around if things are not good for this and that company. And they're doing all this financial tracking and understand their balance sheet and the financials for you, so you don't have to worry about that. This is a very good thing for starters. And then eventually, when you actually understand what's happening, how this all works, then you can start investing into individual stocks if you think that's the right thing for you to do. I also have a video link here or here, I keep forgetting where it is, which tells you what are the best ETFs out there right now. Check it out and see if something is going to work out for you. So that closes my list of the most common mistakes that investors make today. And I hope everyone took something from it. I hope everyone learned something for yourself. Let me know in comments if you did, or if you did not, that works too. And I really hope this is going to help you bootstrap your investment journey. You can also check out a video link here that tells you how much money I made last month and how my portfolio looks like. I'm exposing everything. I'm telling you everything and showing all my stocks, how many of those I have, how much dividends I got, and basically getting naked there. You gotta watch it. Also, like, subscribe, see ya.